It's never going to get any better. Don't look for it. Be happy with what you got. Because the owners of this country don't want that. I'm talking about the real owners now. The real owners, the big wealthy business interests that control things and make all the important decisions. Forget the politicians. The politicians are put there to give you the idea that you have freedom of choice. You don't. You have no choice. You have owners. They own you. They own everything. They own all the important land. They own and control the corporations. They've long since bought and paid for the Senate, the Congress, the state houses, the city halls. They got the judges in their back pockets. And they own all the big media companies, so they control just about all of the news and information you get to hear. They got you by the They spend billions of dollars every year lobbying to get what they want. Well, we know what they want. They want more for themselves and less for everybody else. But I'll tell you what they don't want. They don't want a population of citizens capable of critical thinking. They don't want well-informed, well-educated people capable of critical thinking. They're not interested in that. That doesn't help them. That's against their interest. That's right. Because the owners of this country know the truth. It's called the American dream, because you have to be asleep to believe it.
Keep away from my 401k. The government now pushing to lock up private retirement accounts as more people tap into them to pay their bills.
How much are you down overall?
About $140,000.
This is what it was in 2005. 2007, you're down below 2005.
Right. Another one went down almost $40,000. One was
Right.
88,000, and then it went down to like 50.
How old are you?
54, and I live alone. I don't have any children. I've been a career girl all my life, and it's been a great career, and I don't deserve this. I'm sorry.
It's all right.
I don't have to tell you things are bad. Everybody knows things are bad.
Well, amid all the ire about Wall Street pay, bonuses shot up 17% in 2009 from the year before. Profit expected to hit yet another record at $55 billion.
I want you to get up now. I want all of you to get up out of your chairs. I want you to get up right now and go to the window, open it, and stick your head out and yell, "I'm as mad as hell, and I'm not going to take this anymore!" I want you to get up right now. Get up, go to your windows, open them, and stick your head out and yell, "I'm as mad as hell, and I'm not going to take this anymore! Things have got to change!"
How many stations does this go out
by?
at?
67.
I know it goes to Louisville and Atlanta.
I'm not going to take this anymore. Then we'll figure out what to do about the depression and the inflation and the oil crisis. But first, get up out of your chairs, open the window, stick your head out and yell, and say, "I'm as mad as hell, and I'm not going to take this anymore. I'm not going to take this anymore. I'm not going to take this anymore."
All around, people are losing their jobs. Corporate interests are outshining human interests. Everyone seems corrupt. The politicians, the business providers, even our doctors and social workers. You don't have to be a financial expert to feel the impact of the world's financial troubles. You don't have to be an economist to know that something is on the horizon, that something big and bad is about to take place. The thing is, this imminent crash and takeover is not on the horizon. It's not just over the hill. It's happening right here, right now. And that big financial collapse you keep hearing about, well, that's just what happens when this whole Zeppelin finally hits the ground. We're already on fire. We're already falling. And all the talking heads want to stand at the minibar, pretending it's part of the ride. Like things are supposed to be like this. Like everything is just peachy keen. You see, the elite on Wall Street and in Washington are literally sucking the funds right out of your investment accounts right this minute. Accounts like your 401k, IRA, Roth IRA, SEP IRA, and more. They have organized and formulated a wealth takeover that will confiscate up to 80% of your wealth in the next 5 years. Make no mistake, this will be financial Armageddon for most people's retirement accounts and investment accounts, both domestic and international. The only reason I know this is because I used to be one of those insiders. I used to be one of those shiny shoot investment brokers selling mutual fund snake oil at a diversified level. You know, large cap, mid cap, small cap, international, and then hold it forever. I made amazing commissions while my clients' accounts received dismal returns. Oh, they didn't know their accounts were crap. They didn't know how much risk they were taking while I benefited with a lavish lifestyle, living off of their eventual failure. Yet one day, something strange happened, which is something that doesn't happen very often in the industry I was in. I grew a conscience. There I was, living the life of my dreams, knowing full well my clients were paying for that life, and that most of them would never reach the level I was at, nor retire with any kind of real nest egg. However, it started eating me up inside. I didn't feel good about myself. I wanted something different. Now, I want to expose the corrupt elite and tell you how they are screwing you over, literally laughing it up at the local Wall Street lounge about how you're taking all the risks. You're losing all the money, and you're not going to be able to retire while they are having the best days of their lives. However, before I tell you how to protect your retirement from the upcoming 80% confiscation, before I tell you how to accumulate and keep a wealthy nest egg and survive the upcoming global crash, before I reveal to you the exact tools you need in order to survive the down market, and I do mean all the tools, pretty much the ultimate economic survival kit. But before I do that, you have to promise me one thing. Promise me you will share this video with everyone you know. Look, I have no idea how long this is going to stay up. I don't know when my old Wall Street wolf pack is going to find out I'm giving the secret to success away for free, or what they'll do when they find out I'm exposing them for what they are. That's why you need to promise me and yourself right now, before I move forward, that you will share this with the people you love, the people you want to be safe when the economy goes up in flames. Can you do that for me? Good. The second thing I want you to do is to take out a pen and paper, because I'm about to give you the best information you've ever received, and I want to make sure you remember it. I want to make sure you absorb the information I'm about to provide you. Can you do that too? Pause the video right now, grab your pen and paper, and let's get started. Now, to understand how we've gotten to this point, it's important to look all the way back to the way things used to be in the United States. You see, back in the early 70s, 42% of employees had a pension. This guaranteed that you would get a hefty percentage of your salary and benefits once you retired. The great thing is that workers really didn't have to figure out much. They didn't have to be some kind of financial luminary to understand that their retirement was secure. In fact, they didn't have to jump through any hoops at all. They didn't even have to figure out how to manage their own savings plan. The mechanics of their pension was not something they needed to pay attention to.
This is the life. What with my retirement plan and a few dollars I'd saved, I didn't have a thing to worry about.
They knew without a shadow of a doubt that when it was time to retire, they would have a secure income throughout the rest of their lives. If you're a baby boomer, there's a high likelihood that your parents and grandparents had a similar plan. So how did we go from that amazing plan to the place we are right now? A place where over half of all Americans say they can't afford to save for retirement. A place where over half of Americans have next to nothing saved for retirement, period. A place where retirees can barely hold on. Well, with great retirement plans and a strong economy, life expectancy begins to rise. And that's exactly what started to happen with these retirees. They started living longer. This, paired with the new accounting rules and global volatility, began to affect the prices. This system started to become too expensive for employers to maintain. They could no longer afford to pay loyal employees a guaranteed lifelong retirement for years of consistent service. This is the beginning of the 401k. Corporations found a loophole against the Internal Revenue Service. Essentially, nothing more than a corporate tax dodge that they began implementing in the late 70s and early 80s, where high earners could put some of their money aside. Yet, that was essentially where the 401k was supposed to end. This tax dodge and loophole security for high income earners, and was supposed to remain just that. It was never meant for or designed for the rest of us. Not until big brokerage firms like the one I used to work for and banks saw the opportunity to boost their business by helping employers set up and run their new plans. They made it sound like the arrangement was a giant victory for everyone. They said that 401ks opened the ability for everyone to save for retirement, even individuals who didn't have access to a pension. They said it allowed people who changed jobs frequently to have a portable investment to take with them. What they didn't explain was that this arrangement only really benefited three people in the long run: fund managers, brokerage firms, and employers. The employers no longer had to worry about paying employees large long-term retirement pensions and carry any kind of risk. In fact, now all of the responsibility, every single bit of the risk, rested directly on the shoulders of the individual employee. They had the risk of how much they needed to save, the risk of how much they needed to invest, and the risk of how to withdraw their lump sum upon retirement so they don't outlive their assets. Then comes the mutual fund industry, who swoops in like a vulture, ready to pick off at employee success. They found a way not only to sell their mutual funds to investors, but to make the mutual funds the very foundation of the 401k plan. And boy, did they push it hard. In 1981, no one knew what a 401k plan was. By 1989, it was on the radar. By the 90s, every single large employer had a plan in place. At first, it seemed like a dream come true. Everybody was winning. The mutual fund industry was charging gigantic management fees, but participants didn't seem to care. During the roaring bull market of the 1980s and 90s, they were seeing their balances skyrocket. People couldn't wait to receive their monthly statements to see how much their values had gone up.
Well, I was invested in everything. Stocks, mutual funds, you name it. We would get monthly reports. Things were growing. Everything was growing. In the 90s, you could not lose money in the market, even if you were a dumb investor. I mean, it just kept growing and growing and growing.
The economy was doing so well that people didn't have to pay a bit of attention to what was happening. It was the dot-com era, and investments were booming.
It was exciting because gradually over time, we would have a day where we would make $7,000 or and as much as $30,000 in a day as it built, and even more.
In 1996, we had doubled our money. We had almost 500,000. It was like, well, yeah, this is how investments work. You invested, and it grows. I mean, that's how I thought about it.
In 2000, tons of Americans lost half or more of their 401k in one fell swoop. Then 8 years later, after a nice rise, the housing bubble burst, and the crash of 2008 put those whose retirements were already at risk into an even worse position.
The mortgage market is far from over.
This is volatility we haven't seen, of course, since way before you and I were born.
More trouble ahead for the nation.
Economic turmoil of recent years is putting a comfortable retirement at risk.
Good evening, everyone. President Bush asked the networks for this television time so he could talk directly to you about a national crisis. Some of this country's major financial institutions are in danger of collapsing under the weight of bad mortgages, and that would be devastating for the entire economy.
We just didn't know. Our portfolio had gone all the way down to where it was in 1996, from 1.5 million to 500,000.
460, I think.
All that was gone.
You know, you may be thinking, all of these economic problems were a result of unfortunate and wide-sweeping economic fluctuations. The thing is, it's not just these market fluctuations that affect your retirement. It's the fact that your mutual fund investments that you own are actually purposely engineered to be insanely complex. They're purposely created to, number one, to confuse you into being placid. And number two, to suck your retirement money right out of your account using tons of fees that most people don't even know exist. Oh, and if these things get a little hairy in the market, all the risk, every single bit of it, is on your shoulders. But the people managing the mutual funds and your 401k sit pretty no matter what. You see, the mutual fund industry and those who craft your 401k want you to remain dumb. They want to sell you a product that doesn't actually make you any money. They want to promise you security while not actually offering you any. Furthermore, they want to confuse you and lull you into complacency.
I showed you the plan. You either had your choices between an aggressive investment, moderate, or conservative. You know, there was nobody there managing my money. It was all up to me.
So traditional pensions don't necessarily let you take it all in a lump sum.
The 401k is one of the only products that Americans buy that they don't know the price of it. It's also one of the products that Americans buy that they don't even know its quality. It's one of the products that Americans buy that they don't know its danger. And it's because the industry, the mutual fund industry, have been able to protect themselves against regulation that would expose the danger and price of their products.
Do you think the industry could do a better job of making people aware of the effective fees on their savings?
I think we could make people aware of the effect of every pressure that they have on their accounts.
What stands in the way of doing that better job?
What I would tell you is sometimes it's very difficult to get people to focus on something that seems complicated and dull and boring. So could we do a better job with helping consumers understand all the things that are tied to what they just bought, whether it's financial services or the riding lawnmower? Yes, it's too complicated.
They are literally banking on the hopes that you don't understand anything that is actually going on with your investments. Why? Well, because it's too complicated for you to understand, of course. And it's not just 401ks. It's literally any and all managed investment funds, including Roth IRAs, SEP IRAs, and more. Bear in mind, I used to be one of these people. My job was essentially selling you investments. My only concern was to make money off selling you, then make money off the management fees you have to pay. In reality, there are zero protocols in place for brokers or investment advisors. Someone with absolutely no financial knowledge can walk up to you right now and convince you to invest in a retirement plan with their financial management company. They don't even have to know what they're talking about. They only need to sound like they do. This does not make them your advisor. This does not make them credited in any way, shape, or form. This just makes them a good salesman. This is one of the biggest secrets my old buddies on Wall Street do not want you to know. And that is the fact that they spend millions of dollars hoping workers will follow their advice. They bank on you being worried, unsure, and uneducated so that you will take their advice. They market themselves as being on your side. But the thing is, the actual term financial advisor means next to nothing. A financial advisor may be someone who is a financial planner, which is a fiduciary who is bound by law to put your interests ahead of their own. Or it may be someone who is a broker, which basically means they're a salesman. Well, the vast majority of these so-called financial advisors, in fact, 85% of them, are not fiduciaries. They are brokers. They are wheeler dealers who are only out for themselves. Their goal is to sell you the most profitable products, regardless of whether or not they actually benefit you in any way, shape, or form.
Anybody can hold themselves out as an expert. They call themselves retirement planners, financial planners, advisors, etc. We don't have a standard way that the consumer can figure out who has the expertise to provide advice.
What's a financial advisor?
That is a term that means almost nothing. It is somebody who might be a financial planner, or it could be a broker who is really a salesperson.
So, how do these so-called retirement planners benefit off of selling you these investment plans? By charging you an enormous amount of hidden fees and management costs. At the surface level, there may not seem to be a large amount of fees associated with mutual funds in 401k or IRA or other plans, but that's because they don't tell you about them. Not only that, they go to extreme lengths to hide them by not even using the term fees.
When I talk to people, I'll ask, are you paying fees in your 401k? And they'll say no.
And you don't see the fees because they're taken out behind the scenes.
How is it that nobody knows this? Is it so it comes out in dribs and drabs and you just don't notice?
Yeah, I mean, because it doesn't show up anywhere on any of your account statements.
The dozens of fees you don't know about are things like asset management fees, trading fees, marketing fees, record-keeping fees, administration fees, fees for withdrawing your money, fees for taking loans, and even fees for retiring. But here's a fee that most people investing in retirement funds actually know about: the management fee. The average actively managed mutual fund carries an annual expense of over 1.3%. Of course, this varies according to your plan. Some funds charge a fee of 2%, or even as much as 5% per year. Even so, most people deal with these fees because, all in all, it doesn't seem like that much money.
Okay, so you lose $500 or you lose $1,000 a year. That's what you would pay to a financial advisor, right? But if you add that up over 20 or 30 or 40 or 50 years in a 401k plan, all of a sudden you're well into the six figures as your balance grows. And that's the difference between running out of money before you die or having a little money left to pass on to your heirs.
Now, let's say you have a retirement fund and your account balance begins with $100,000. Let's assume that there are fees of 2% a year, your annual management and other hidden fees. By compounding this over 20 years, that measly 2% annual charge would subtract a total of more than $150,000 from your account. That's more money than you even started with.
What happens in the fund business is the magic of compound returns is overwhelmed by the tyranny of compounding costs. It's a mathematical fact. There's no getting around it. The fact that we don't look at it, too bad for us.
Do you really think it's a good idea to invest in a product where you put in 100% of the capital, take 100% of the risk, and the managers end up making more than you invested? Now, after learning all of this, it's natural to be angry, especially when you realize how it's not a mistake. It's not just a result of the market going up or down. That literally all of your money that is being sucked from your retirement fund is on purpose. It's about making insiders richer while misleading the lower and middle class workers into thinking they're doing something smart with their money. It's about ensuring that the elite Wall Street so-called financial advisors are going to make a killing no matter what the market does, because they've essentially sold you a death trap that you agreed to pay for. Now, If you think that gold or precious metals will save you, think again. That's a farce, just about as misleading as all those financial advisors out there trying to sell you the most sound retirement plan. All those people telling you to purchase precious metals to protect yourself during the upcoming crash are just playing off your fear. It won't work. Remember, the math never lies. So here's the question, folks. What can you actually do? You know things are about to get even worse than they already are. You know that you can't trust any of these financial advisors. You know the government has their hands in your pockets while Wall Street quietly siphons the money right out of your accounts. And you know that precious metals won't help you. It seems like a pretty desperate scenario. There's hope, though. There is a way to protect your wealth, secure your retirement, and ensure you survive comfortably. There is a way for you to get your money out of the hands of these false advisors. And it's a heck of a lot more simple than you think. In fact, it's right under your nose. Now, I hope you've been jotting down notes so far. If not, then make absolutely sure you have something to write on, because I am going to explain exactly what you need to do right now in order to get out from under the government's control. Remove yourself from under your financial advisor's manipulation and put your future back into your own hands. Remember, when I told you that I used to be one of those so-called financial advisors and how I grew a conscience and decided to start helping people get out of the system instead of being a slave to the corrupt global elites? Remember? Well, the first thing I had to do was find out an alternative, and it took a lot of time and research. I developed a company called Inner Analyst, and we went to work studying market history and the activities of insiders. We wanted to know how some people were getting rich while others were getting taken. Of course, I knew how the insiders were getting rich by duping workers into terrible retirement investments. But what I didn't know was any solid alternative that would allow the average, hardworking person to invest on their own without spending a ton of time becoming a financial authority themselves. Our question was simple, and it was this: which mutual funds consistently beat the S&P 500 index over the long term? Now, if you don't already know this, the S&P 500 index is used as a way to measure the stock market's general performance. It's made up of the largest 500 American companies. We simply wanted to know what funds actually beat it. This would allow me to shed my reputation as a heartless Wall Street wolf and provide my clients with something that is actually a safe investment. We compared all available mutual funds to the S&P 500 on a 10-year rolling month-to-month basis, starting in 1927. January 1927 through January 1937, February 1927 through February 1937, March 1927 through March 1937, and so on. The results totally floored me because it was something so outside my realm of expectation that I had to stop and take immediate notice. I realized that as a financial advisor, I was completely, utterly, 100% useless. In my quest to find the best mutual funds for investors, funds that would actually help them and would solve my crisis of conscience, I found out that my job was just useless. In more than 80 years of data, we uncovered that on a 10-year rolling month-to-month basis, the S&P 500 index outperforms 86% of all mutual funds. 9 years later, CNN-FN did a similar study and confirmed our research, concluding index funds beat 86% of actively managed funds. Basically, if you own index funds, while the market is rising, you're making money. The thing is, you can utilize discount brokers and pay $5 a trade to invest without having to pay fees to an expensive manager whose sole purpose in life is to suck money out of your investment.
Get management fees out of the equation. You own American business and you hold it forever. That's what indexing is. Own a fund that owns the entire U.S. stock market, does no trading, has a cost of 1% a year to own, and that is the only way to do it. Then you are the creature of the market and not of the casino. It has been proven right year after year after year because it can't be proven wrong. It's a mathematical certainty, a tautology, if you will.
Essentially, you are buying and holding a diversified basket of stocks that match the holdings of a market index. Although this doesn't eliminate your risks, it definitely gets you out of the pocket of an active manager, because that active manager is now essentially you. However, more than 70% of mutual fund inflows usually follow the previous year's winners and are based on the Morningstar rating for funds. This means that most of the money going into a mutual fund goes in the year after the fund ranked in the top 10. This is why the public is always late chasing returns. Yet 1 year later, the top funds are always underperforming the index again.
Good markets turn to bad markets turn to good markets. So the system is almost rigged against human psychology that says if something has done well in the past, it will do well in the future. That is not true. That is categorically false. The high likelihood is when you get to somebody at its peak, he's about to go down to the valley. The last shall be first and the first shall be last.
We decided that 1 year's proof wasn't enough, so we decided to go back all the way to 1998. Over the long term, the top funds consistently ranked in the thousands almost 10 years later. By this time, I was wondering why nobody was teaching this stuff. But then I had to remind myself that it's because the mutual fund industry is paying millions in marketing each year to make it seem like that's the only option available to people like you. Ted Aronson wrote in his book, Confessions of a Fund Pro, it takes between 20 and 800 years of monitoring performance to statistically prove that a money manager is skillful rather than lucky, which is a lot more than people had in mind when they say long-term track record. The proof is in. Fund managers cannot perform well over the long run, and performance always stinks. They're in it to suck money from your account during the long term. And just like they orchestrated that, they're the prime puppets in the upcoming 80% wealth takeover. You may think to yourself, but what about day trading or forex trading or binary options? A recent study conducted by Brad M. Barber and Terence O'Dean of UC Davis and Berkeley came to the same conclusion that all prior research had. The stocks bought by occasional day traders actually underperforms those sold, even before considering transaction costs. Only 1 in 40 day traders make money. Fewer do so on a consistent basis. Here's a simple truth in that regard. Buy and hold doesn't work, but neither does day trading. You may be thinking that gold and silver is your savior. Unfortunately, gold and silver bugs are being manipulated. Our crooked politicians and foolish media talk shows are setting them up for a 1933 repeat performance. If you don't think it will happen again, you're in dreamland. With today's technology, the government knows precisely where every single flake of gold is hidden. If the president wants to recall gold, he will. And you will promptly turn over every single piece or face imprisonment and heavy fines just as they did in 1933. CMI, a gold insider, recently wrote on the topic of gold confiscation, including numismatic collectible gold. The concept of non-confiscatable gold is counterfeit. The idea lives only because dealers continue to push it for their own benefit. Investors who do not have the facts are unable to know otherwise. At least that guy is an honest gold peddler. But the majority are just as bad as broker salesmen offering you poisoned retirement plans. Let's roll up the curtain right now. Let's shed some light on this whole situation. You're going to learn right here, right now, exactly what you need to do in order to utilize index funds to grow your nest egg, avoid confiscation, survive the stock crash, keep your wealth intact, and do so without any kind of money manager or ridiculous financial advisor. Remember, at the beginning of this documentary, how I told you I would provide you with an economic survival kit? That's what we're going to look at right now. My associates and I have been developing this survival kit for many years. Our number one goal at InterAnalyst was to first find out the safest way of investing while getting people out from underneath the financial confiscation of the global insider elite. Our second goal was to try and figure out a way anybody, regardless of their situation, job, time, or market knowledge, could start getting their retirement nest egg in order. The result? A simple yet incredibly powerful comprehensive set of tools. What you see in front of you right now is the S&P 500 index over time. We converted our research into 3 proprietary charts which, when combined, deliver the golden key to unlocking the puzzle of surviving all crazy economic climates. This first indicator is called Inflation-Deflation Adjusted Relative Strength Crossover. It's a multi-interval indicator that signals turning points related to relative market strength. This second indicator is called Triple Fractal Momentum Moving Crossover. This is a multi-interval indicator delivering turning points related to market momentum by complicity. This third and final indicator is called WMA Hold Crossover. This indicator minimizes market whiplash, preventing us from becoming traders. Enough with the technical stuff. I'm going to take these powerful but amazing proprietary indicators and simplify them to the ridiculous for you. What you really want to know is, when should you get in and out of your investments, right? History has proven that by combining these 3 indicators and following 2 simple rules, you'll join the insiders and win virtually every time. What you have been looking at for the last minute are the 3 independent indicators. And now, what you see in front of you are the 3 indicators combined and optimized, showing you precisely when all 3 agree on a change in market direction. Now, all you need to do is follow 2 simple rules to join the insiders and become tremendously successful. Let's cover both simple rules right now. Rule number 1. When all 3 charts behind the scenes agree that the market is likely to rise, a green arrow will appear in the chart as you see here. Here is what you do. Buy index or growth funds within a 401k or in any investment account you own. This makes you money while the market is rising. Rule number 2. When all 3 charts behind the scenes agree that the market is likely to decline, a red arrow pointing down will appear in the chart as you see here. And here's what you do. Sell all of your investment funds within your 401k or any investment account you own to preserve your accumulated wealth. When you sell, your money will automatically stay in the account and rest in a money market fund. This can help you avoid a decline that may destroy your wealth. That's it. That's all there is to it. All you have to do is log in the private subscriber area each weekend and check to see if there is an arrow. If there is, simply make the change in your investment or retirement accounts. Oh, and don't worry about how to make the changes. Our online e-learning will teach you. It's extremely simple. On top of that, each one of these bars represents a month. So you can see that you likely will only have to make a trade every 3 to 5 years on average. Now, you may be wondering how accurate it is. It is better than 86% accurate since 1950 and 100% accurate since 1995. You have just learned how to join and follow the insiders to maximize your growth. and avoid massive losses from bear market declines like in 2000 to 2003 or the more recent 40% decline in 2008's crash. And you may be wondering, hey, what about me? I don't live in the U.S., but I'm just as interested in protecting my future and maximizing my growth. That's what is amazing about this whole thing. Not only does it work in North America, it works on European markets, Eastern markets, and South American markets. Basically, if you're in the market right now and you want to secure your future, no matter where you are, this is what is going to keep you well above water when the wave finally crashes. As you see here, we file all trade signals with the CPA to record and validate historical performance, and we continually update it when there are changes. Furthermore, as you can see in this chart that compares inter-analyst signals to buy and hold since 1995, well, there is no comparison. Using this method, me and my team avoided the entire 2008 40% stock market confiscatory decline. Would you have liked to avoid it? Look, here's the thing. Nothing is perfect. I'm not perfect, you're not perfect, and absolutely no market predictor out there is going to be perfect either. However, you don't have to be perfect to be the best. And that's just what this is, the absolute best, top of the line, most accurate tool out there. If a 60% decline occurs, and you avoided 40 or 50% or more of that decline, wouldn't you say it's worth it? That's what this tool does for you. My question for you right now is, can you afford a 40, 50, or 60% decline? What about an 80% decline? This decline and confiscation is not a matter of if, it's a matter of when. And that when is not far off. Here's the great thing about this tool. The cost of your subscription is tax deductible. Not only that, the cost of the subscription itself will never amount to anywhere near what you spend on hidden fees and management fees when using all those other mutual fund companies and their managers. I made this video because I wanted to help people. I wanted to spread the word about how the elite global insiders are literally confiscating your wealth and that they're doing it on purpose. I'm sick of hearing about people's livelihoods being destroyed. I made this documentary because I wanted people to be successful. I want people to build and maintain their wealth. That is what I want. What I've just shown you is a survival kit, not much different than a first aid kit. This is your economic first aid box. You need to put it in your life. Once a week, you need to check it and make sure it's stocked up and that it's working properly. Because I'm telling you what, the minute the government and Wall Street insiders and the corporations come for your money, you're going to be wishing you had that survival kit. You're going to wish you had the wealth preserver because you're going to be hurting and you're not going to have anything there to alleviate that hurt. For your own good, click the link below and put the wealth preserver in your life. Get your retirement fund out of the hands of evil elites. Put it back into your control and preserve your wealth during the upcoming crash. Click the link below and I'll see you on the inside with all the information you need in order to get started and go from point A to point B. There is no guesswork involved. So click the link and get ready to safeguard your wealth. See you on the other side.